With $500 each month, is it possible to reach Roth IRA millionaire status? Yes, but there is a slight catch that we ought to presumably discuss. We'll go over how to maximize one of the most potent retirement accounts in this video, as well as what it takes to become a millionaire with a Roth IRA. By the way, just around 18% of working-age Americans have IRA accounts, meaning that even fewer have Roth IRAs, according to the Census Bureau. This, in my opinion, is a mistake, especially as it pertains to the second investing account, which I believe many people ought to max up annually. I'm aware that there are some technical nerds out there who will be frantically posting in the comments section below that an IRA stands for an individual retirement arrangement. Relax, sip some warm tea, and let's begin to learn more. I'm going to refer to it as an individual retirement account because that's what us regular folks call it for the remainder of this video. So go sit in the corner. A Roth IRA is a self-directed retirement account where you can invest your money with the potential for growth and tax-free withdrawals. Wait a few minutes. We'll discuss the investing aspect of things later in the video. Starting in 2023, you can make contributions of up to $6,500 per person year, or $7,500 if you turn 50 by the end of the year. I should also mention that stay-at-home parents can contribute to IRAs if their spouse is employed and the couple files their taxes jointly. Even if you have access to something like a 401k, 457, or taxable investment account, in my opinion, a Roth IRA is one of the most crucial accounts that the majority of people should be investing in for reasons that I will go over later in this video. You really need to be conscious of the self-directed portion of this account. Now, unlike other retirement accounts, a Roth IRA is not automatically established for you by your employer. You are in charge of the entire process. The fact that just 18% of working-age persons actually have an IRA, in my opinion, is partly due to this. Since not everyone qualifies to make a direct contribution to a Roth IRA, you must open an account, make a deposit, and make your own investing decisions, which we'll discuss in a moment. To be eligible to make contributions to a Roth IRA, you must have earned income that complies with the IRS definition of compensation. I'll display what the IRS website considers as remuneration on the screen. You may now quickly search for publication 590A on Google to discover more about the specifics. Additionally, there are specified salary limits. Single tax filing must be under $153,000 and joint salary must be under $228,000. Since each person's circumstances are unique, you will need to determine your own modified adjusted gross income. The bad news is that in order to directly contribute to a Roth IRA, you must abide by these regulations. Now, the word directly is important, but there are two encouraging things. The first is that because income levels rise over time, if you make too much money now, you might eventually reach that limit. The second piece of good news relates to the possibility of making an indirect Roth IRA contribution. Even if your income exceeds the threshold, you are still permitted to make a backdoor Roth contribution to a Roth IRA. I won't go into detail here, but it basically involves making a regular IRA contribution and then converting it to a Roth IRA for the tax-free investment growth. Taxes should be considered when making this decision for yourself as well, because if you do a backdoor Roth, you will have to pay taxes on the money this year so that it can continue to grow tax-free within a Roth IRA in the future. Therefore, before initiating a backdoor Roth IRA, be certain that you either speak with your accountant or that you comprehend everything. You are not required to make contributions during that calendar year. If you believe that you might possibly exceed the Roth IRA income restrictions for the year but are unsure, that's because you can make contributions to your Roth IRA for the current year up until the tax filing deadline of the following year. For instance, if you start a new job in the middle of 2023 and you anticipate a bonus that could push you over the Roth IRA income limits by the end of the year, you can wait until the end of the year to figure out your modified adjusted gross income for 2023 and contribute directly if you fall under the income limit. After discussing how to deposit funds into a Roth IRA, it is important to comprehend how to withdraw funds from the account. You must understand this in order to avoid unintentionally messing up something. Once you reach the age of 59.5, you are eligible to take the whole balance from your Roth IRA. Now, if you attempt to take the entire sum prior to that, you will be required to pay a 10% tax on a portion of the funds. There is a small catch here. So hold on before any of you go absolutely nuts about how your money is locked up forever. Only the investment growth amount of your Roth IRA is subject to the 10% early withdrawal penalty. At any moment, you are free to withdraw your contribution amount without incurring a fee. For instance, if you contribute the maximum amount to your Roth IRA for 3 years, and during that time, your investments increase, and the account reaches, say, $30,000, you can withdraw the $19,500 you contributed without incurring an early withdrawal penalty. If you attempt to withdraw the gains in the account totaling $10,500, taxes will be due. But keep in mind, you only need to be concerned about this kind of thing if you intend to take any early withdrawals. In 99% of cases, I believe trying to make an early withdrawal of any kind from your Roth IRA is a very bad idea. Some individuals will complain about how, oh my God, they're keeping my money in a safe till 59 and a half. I want to use my money now since it belongs to me. Those people, oh my. This limitation is in place to prevent you from taking an early withdrawal so that you can use the account for retirement as intended. Try your best to refrain from touching this account till you are retired. Simply act as though you are not permitted to handle this money at all. In the event that you have a short-term cash shortage, attempt to find a solution without resorting to your Roth IRA contributions as a safety net. After all, emergency funds, not retirement accounts, are intended for just such situations. I like to keep reminding you guys that the younger generation needs to watch out for the older, retired generation. You owe that individual a debt of care, and taking their money before they're retired would be like spitting in their face because their earning potential is currently inferior to yours. You must choose which investing firm to utilize because a Roth IRA is completely under your hands. There are now a huge number of them available, including Fidelity, Vanguard, Charles Schwab, and M1 Finance. From the standpoint of a typical investing firm, Fidelity is adequate, but my preferred option is M1 Finance because of its superior user interface and focus on long-term purchase and hold investors. Opening a Roth IRA is a straightforward procedure. In the case of M1 Finance, you will select Add Account after creating an account, select the Retirement Account option, select to open a Roth IRA, and then confirm that this is what you want to do. You will then need to link your bank account in order to fund your Roth IRA. Now that M1 Finance is keeping track of your funding history, you may consistently stay below the permitted contribution. However, by all means utilize your preferred brokerage if you have one. You must begin investing the money as soon as it is deposited in the account. Now, many people omit this phase, which is bad if you want to allow your money to develop. You want to have as much money in your Roth IRA as you can, because it grows tax-free and may be withdrawn tax-free. However, that does not give you permission or a justification to increase your level of investment risk above what you would ordinarily do. Yes, we want the account to become really large, but it is not worth putting all of your eggs in one basket for a highly speculative investment when the risk of loss is equal to the reward. Just stick to what you know if you know what you're doing when it comes to investing. Build yourself a good, sound classic index fund or index ETF portfolio if you don't know much about investing in stocks, or if you're like me and know a lot about it but don't like playing around with specific equities. You could create something akin to a two-fund portfolio using the Vanguard Total US Market ETF and Vanguard Total International ETF, or you could do whatever else you wish. I personally stick with a two-fund portfolio within M1 Finance based on my particular situation at this moment. However, I don't advocate it as I don't know your specific situation. This step is made simple by M1 Finance thanks to their Pi investing. All you need to do is select the percentages for your investment allocation and touch the buy button. Your money will then be invested automatically depending on the percentages that you have already selected for each investment fund. There's no need to calculate the cost yourself and click into each fund to buy it, like you would on a website like Fidelity. M1 Finance takes care of all the work on your behalf. I have a ton of videos that can assist you in creating a straightforward portfolio that is quite simple to manage. Now I'll compile a special playlist of those videos just for you. It will be linked above my head in the description, and at the conclusion of this video too. So, the first issue that needs an answer is, could you really become a millionaire using a Roth IRA? Yes, without a doubt, but there are a few things that need to go your way. The first factor is how much time and money you have invested. Like most investment strategies, the longer the better. Warren Buffett has a terrific track record as an investor. But one of his secrets to success is the length of time he's been doing it. Check out on Google and see how long he has been investing. Essentially, his entire existence. If you contribute the maximum allowed to a Roth IRA for the next 37 years, at an average yearly return of 7%, you will have just over $1 million in your Roth IRA. The average yearly return you want to expect will be the second aspect that determines how soon you become a millionaire with a Roth IRA. I personally don't like to anticipate an average yearly return of greater than 5%, but if you do, it would only take you 30 years at a 10% average annual return. It's acceptable if you don't become a millionaire within a Roth IRA because the account is still quite beneficial in terms of tax savings. You'll need to understand portfolio construction, the distinction between classic index funds and index fund-based ETFs, and how to invest in a Roth IRA. You can now study all about those subjects on our channel by giving this channel a thumbs up, signing up for the channel, and touching the notification bell. You can support this channel. There are additional suggestions for assisting you with investment, cryptocurrency, personal finance, and financial independence in the description. Be sure to watch our other videos on our channel to find out more about how to invest and earn money that bring you closer to financial wealth.